Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Setup Sunday, let's take a look at some charts, graphs, figures, and fun here. I think this week is probably going to be a nothing burger, just across the board. I think it's going to be a lot of chop all over the place. The charts look good on lower time frames, and I'll go over that, but it just feels like end of the quarter, end of the week, March has been really good. We got tax season, just something to consider. Yeah, we can full send to 80K this week. That's a possibility. That's on the roadmap. I don't really think in my heart of hearts that that's going to happen. But hey, I could be wrong. It's a short week. It's Good Friday in the US, which means 4 days of inflows instead of 5, and potentially GBTC selling another 2 billion in 4 days instead of 5. I hope that's not the case. But if that is the case, again, if this then that, we're building the decision tree. This whole video is going to sound like I'm saying up or down, but it really is dependent on what goes on with GBTC. Do they, via Genesis, sell another 2 billion or not? Do they sell 1 billion this week, 1 billion next week? Do they have to get it done by the end of the quarter? Do they have some deadline, right? Nobody knows. Nobody knows. Last week, the ETF inflows were on the weaker side, which meant the net outflows were on the stronger side. Everybody's still onboarding. I mean, this stuff's going to take time for TradFi to get connected. Bitcoin halving's coming up. Don't lose your shirt over some nonsense week like potentially this week. You know, most people, hopefully, have been diligently dollar cost averaging or have lump sum bought sometime last year and should be doing nothing. Okay, most people should be doing nothing. They shouldn't be trading this or anything. Back to legacy for a second. You know, I guess last week we had Powell come in and say, inflation? Yeah, it's fine. Last 2 months have been higher, but okay, whatever, it's fine. And then he said, unemployment, yeah, it's up, but it's fine. It's fine. No problems there. Okay, fine. Look, you know, you say you're data dependent based on XYZ, and those data points, to me, show a potential need to not consider cutting, but that's not what Powell saw. He also mentioned a QT taper, which just means more assets on the Fed balance sheet, more liquidity in the ecosystem, which is bullish for risk. If 3% is the new benchmark for inflation, that's turbo bullish for risk, terrible for everybody else, terrible for anybody without assets. So hopefully inflation can stay down, but we'll see, at least on the CPI numbers and the PCE numbers. So we had Powell come out, right, and say what he said, which was super dovish. Markets love that. But then the rest of the world is like, actually, guys, we need to talk. It's not going so great in our country. We need to cut. The Swiss came out with a surprise cut. Other countries are saying that they're likely to be cutting sooner. So not only are we higher for longer here, but we are hawkish for longer here and more hawkish than the rest of the world, even though we're dovish in our own little vacuum of a bubble on a relative basis. We are less dovish than the rest of the world, which meant that DXY had some rebound in a bullish direction last week. So this is also something to watch. If DXY continues to break out, I'll bring up to the chart in a second. If that continues to break out, that has a pretty high upside target. So we can really hope that that does not break out, because if DXY breaks up, risk probably does not follow with it. There's a lot of geopolitical stuff going on still. None of it's getting any better. I'd say all of it's probably getting worse. You had a Chinese cargo ship in the Red Sea, accidentally, I think is what they said, get downed by the Houthis. So all sorts of stuff going on. Oil doesn't seem to care. Not much seems to care yet. I don't think it's enough to scare anybody out of a risk position or a Bitcoin position, but yeah, it's there. You can acknowledge it. I don't think you can trade off geopolitics, but I wouldn't be a turbo doomer about it. And then for Bitcoin, we'll of course talk about the head and shoulders Palooza that we're currently experiencing. Really, this is the main thing I'm concerned with on the bullish side. We have not pulled back to the daily Kijun. We don't have to do that. We don't need to do that. It just makes the trade easier. It makes the setup easier. That's at 56K. Lots of chop. ETFs flows thus far weekly. Last week we had record inflows. Sorry, 2 weeks ago we had record inflows. Last week we had record net outflows. Okay, so just completely bipolar. And those outflows last week were due to Grayscale, right? Were due to GBTC, which is not necessarily something you're going to see in the press. This is from Bloomberg, and it's funny to see these headlines already painting this in like a negative fashion when it's just impossible. If you take in the totality of what's happened here, record flows, 30 straight days of inflows, 39, whatever it is, just wild, right? So I think it's good that the press is having their field day. You know, FT hates crypto. They hate Bitcoin. So they're going to pounce on this any chance they get. It's just funny to see it, right? So as dumb as this is really good for us. The last thing we want is crypto or the media coming out and saying crypto to the moon. Here's that data point, 49 straight days, sorry. I think it's accounted for something like over half of IBIT's flows for the year. Yeah, just wild numbers from the Bitcoin ETFs so far in a bullish fashion. And we don't have most of the world connected yet. The first step is getting the product approved and then getting it listed and then having everybody have access, which we're not anywhere there yet. This is where we are, right? In the ball game. For a lot of people, even if they wanted to buy it, they cannot. So we're getting there. We're getting there. One other housekeeping thing from, I think, 2 weeks ago, we were talking about this extremely large, likely single position or single person, single entity who went long on Bitfinex in mid-2022 and looked to be finally closing that position in a pretty fast way over the past couple weeks. And the reason this cropped up that I noticed what was going on is because of the Bitfinex discount, the Coinbase premium. This is resolved now, but one thing you'll notice is when there's these large disconnects in the market that need to be arbed or can be arbed, we typically kind of halt. We don't really go anywhere. We don't really do anything until the market plumbing stuff is figured out. And for whatever reason, this did line up with the rising wedge breaking down. Now, logically, you could say, well, there was an arb here and this was arbed out. The moment it was arbed out, price went down. I mean, that would be my logical read. It's just something to think about next time you see this. Probably within this cycle, we're going to see something similar on some exchange that's completely disconnected. Binance could be the next one. I don't know. Just some food for thought. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to the U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. One thing I'll mention for Kraken specifically, when you're implementing a stop loss for a position, under the More Options tab down here, the trigger signal, which means the price at which the stop loss would trigger, can sometimes get falsely tripped on these super wiki environments. Sometimes you'll see on any exchange, including Kraken. And one thing you can do here, instead of the last price for the trigger signal, you can use the index price, which is the CF benchmarks price. CF benchmarks indices are what's used in the CME, if you're curious. So they're more robust, I guess you could say, less noisy, perhaps. Because when you get stopped out, you want to get stopped out for the right reasons, right? Not necessarily for a wick that may not go in your favor, right? So that is probably less likely to happen using index price over last price. All right, so for Bitcoin, quarterly Q1 has been wildly bullish. Who doesn't love a bullish quarter? Coming to an end here this week. Q2 is usually the more bullish quarter. You know, what they like to do is break this down as far as, you know, number of positive, number of negative, average, median. You can just see Q2, Q4. Now, Q4 is where things really start to explode. Q3, not great. Q3, September specifically, not great. For ETH, the first half of the year is the most bullish. And actually, Q2 has only been negative one quarter, which is pretty wild, at least since 2016, right? Another thing to look for on seasonality, if Q1 is bullish, how often is Q2 bullish, right? Fairly often. You know, it's not impossible. It's not like Q2 is all of a sudden going to be bearish. You can do the same thing with the month on the monthly level. When's the last time we've had a string of 4-month positives, for example? When's the last time we've had April positive after a fully bullish Q1? And that has happened before, 2013. Okay, it's been a while, but it has happened before. And September, again, you can see the number of red months historically. So when you're looking at seasonality, is it important? You know, it's fun, but it does kind of give you a hint at what you could probably likely expect. If every month, ever, in April was negative, then yeah, I'd say it'd probably be pretty hard to have a positive April, right? Now, like September, most of those are negative. September's usually a junk of a month, okay? April, not so much. April's usually been pretty bullish to the tune of, like 30%. So when we are positive April, we are typically very positive for April. So we'll see what happens, but that bodes very well with a halving month here. Now, as far as the daily cloud, we got to talk about this because we are sort of hemming and hawing, will she or won't she, right? Breakdown to the daily Kijun at 57 or whatever this has moved up to. The daily puts you in an awkward spot. There's no clean entry. There's really no clean exit yet. Best case on the daily, if we sort of grind slow enough to give you a clean exit somewhere effectively at 67, right? That's going to be weeks away, so not super relevant right now. But what's super relevant right now is where support is if we break for lower lows, and that's 57. Okay, so I've said my piece. I'm not saying it has to happen or needs to happen. I'm saying if we break lows, if we break 62, we are going to 57. That is high probability in my mind based on the cloud. Now here's where the coin flip stuff comes in, because on the CME, which I'm using because there are a reduced period of time at which we are trading, historically it has cut back on the noise from the chart. It's basically the US session, okay? I would argue this as a real deal head and shoulders, okay? That has a bearish bias, outright flat. When I see this, I can't assume we're going to go higher. So this needs to resolve itself. This isn't on the daily, it's on the 4 hour. But in order to invalidate this pattern, we need to break the right shoulder and close above the right shoulder. Very easy to do. We're already at 67, okay? 66.5, whatever we're at. So it shouldn't be too difficult. But we really need to do that first. Because if we start playing around here, below the yearly pivot at 61.5, okay, that's not where we want to live if we're bullish. If we're bearish, we want repeated retests of 61 until it breaks. Okay, because then again, your targets are actually quite low. From pivot to pivot, it makes sense, but from the cloud, it doesn't really make sense. If this is invalidated, again, stay with me. If this, then that. Okay, if this, then that. If we invalidate this, we can measure this higher, basically to the next pivot, which is 82. Okay, so yes, 82 is in the cards this week. Not an impossibility. Or next week, or April. And the sooner we invalidate this, the more confident I become on the next pivot in the 80s, okay? You get even more confident that this is invalidated once we break the head and shoulders, potentially, which is the all-time high, right? If we can hold this pivot, that's great. Much like this down here, right? We just grinded this thing for days, for a couple weeks, I think it was, right? Until we broke that yearly pivot. Then we grinded again. We broke it, came back to it. Didn't quite have the strength, right? Came back to it. So I like 82, right? It makes sense. There's confidence there. Just to look at one example quickly of a failed head and shoulders in a previous run. This was 2019, 300% move. Near the top, we had what I called a head and shoulders. Eerily kind of similar with this left shoulder dipping super low, which I think was a Bitstamp or Binance issue. I forget which was which here, but the moment this invalidated, okay, again, if we wanted to map this out on the 4 hour, a higher high above the right shoulder is invalidation. So that is what we want to see. And it doesn't have to be a slam dunk. It doesn't have to look pretty. This took its sweet old time and invalidated the shoulder, invalidated the head. Okay, we keep going. Game on. And you can see that the measurement slowed down at that 10K, 11K level and even exceeded that. So it's not like 80 is the hard ceiling here. It's just if we're measuring the consolidation levels, and this is the least conservative measurement, taking wick to wick here, you get your 82K equivalent, okay, if the head and shoulders fails on the CME futures. What's interesting is if you look at spot, okay, if you look at just normal Bitcoin price, you have a pretty good case for a multi-day inverted head and shoulders. I don't know if we're going to see a final shoulder here if we break below the 4 hour cloud again, whatever, right? Again, this measures somewhere 75, 78, whatever. It doesn't really matter. I like that this dipped to the yearly pivot, tried to break down. It tried to break below the cloud, did not. Several times. It reset the 4 hour, which I love to see. And like I say up here, people keep asking me, okay, are you bullish yet? Are you bullish yet? What do you do? What are you doing? If we start checking off these boxes into US Open, I love it. I'm all back in, all in. Love it. Every red cent I have is buying the orange coin. And you get more confident as the cloud flips green, as we stay above the cloud, as we get a bullish TK across. We're not quite there yet, right? So in the US Open tomorrow, you will see that. But this looks very good for higher highs. I certainly wouldn't want to be short looking at this, right? As much as I want to be short looking at this, this also looks very good on the 4 hour. It is unlikely that we sort of invalidate both of these things, I think. It's unlikely that we make a higher shoulder here or revisit the head at 75 and then dip back down to 61. I think that's unlikely, but very much an if this then that. And adding onto the narrative, Monday, if the GBTC outflows are high, right, then we will probably see retests of 61 because, again, I do not expect ETF inflows to be high this week. I could be wrong, but it's very much data dependent on the flows, right? So that's Bitcoin. ETH, you know, this tapped the Kijun. It satisfied that retrace requirement, but does this look happy to be here? It does not look happy to be here. Looks like it wants to go home. I don't think there's a trade here on high time frames. It's bullish, sure. I don't think there's anything to do per se on high time frames. Much like Bitcoin, ETH also has that kind of droopy diagonal inverted head and shoulders. And the same rules apply, right? You want to see this above 35.70 or whatever that is to be super confident. As this starts to break up and through the cloud, you can open and add and whatever else, right? Like there's no hard rule that I have to do this at this level. If you're confident, go for it, right? Nothing's stopping you. But I think you're going to have the most luck if we are holding above 35.70 on ETH. SOL looks quite a bit different than Bitcoin and ETH. SOL looked like it tried to break down this weekend, and again, it couldn't, right? So, okay, that's fine. Maybe we try to be bullish. Maybe we continue to shop for a week. Something to watch on the 4 hour would be a bullish TK recross with price above cloud. That would be super bullish. This could also be not inverted, but an Adam and Eve as well, which would be a bullish reversal. And there are so many of these charts, right? Uni, Aave, OP, Doge, Ripple, even Ripple. Okay. Ripple even looks good here. LTC, Link, all of these look very similar. So if Bitcoin breaks up, I expect them all to try to break up in a big way. Will they outperform Bitcoin? I don't know. Now, if Bitcoin breaks down, it's good night altcoins. All of these will break lower lows on the chart. Okay. All of them. None of them are safe. So keep that in mind. You have to have an opinion on Bitcoin this week. If Bitcoin breaks local lows, all of these charts are done. Okay. But in the moment right now, this little time capsule, they look really good. Uni looks really good. LTC looks really good. Those are probably my two favorites here. Doge, I kind of missed the entry, but Doge has looked great. So there are tons of stuff on the alt side that looks good. On the 4 hour, funding is fine. You know, it's flat. It's not angry and hot like it was. You know, we're not adding colors here like we were a couple weeks ago. So funding is fine. This is Uni again on the 4 hour, just zooming in a little bit. All the same thing. Okay. You got an edge to edge. You got bullish TK cross. You've got the inverted head and shoulders. You've got plenty of potential stop loss levels. Looks good. Looks great. Does it move to 15? I don't know. I don't care. But if Bitcoin does well, Uni should definitely do well. Litecoin the same. Even if you're not trading this stuff, I think it's worth it to paper trade it. What would I do if this then that, right? What happens if US Open is bearish? You know, do all these charts break down? Do you hit a stop loss level on your paper trade? Whatever. Just something to think about. Final coin, right? Even this one, there's so many versions of this chart. I don't think you can go wrong trying to trade it. Okay. Whether or not it plays out, we'll see, but they all look really good on low time frames. Now, ETH-BTC does not look good. ETH-BTC continues to break lows. The more lows this breaks, the less likely this thing is to act as a diamond bottom, which would be a reversal. Much like the head and shoulders example, if the bullish reversal fails, fine. You just measure that to the bearish direction, and that would bring you between 039, 045, something like that. I assume the ETFs in May are going to get denied. That's going to help this probably break lower, but I do think that's the level to buy. I don't think playing around up here, I don't think that's worth it. Even if the ETFs miraculously get approved, I just don't think it's worth it to play this. What you want is pain, devastation. Like if I'm going to buy a falling knife, okay, It better be a chart pattern. It better be something. It better be something down here. So hopefully news is on your side as well if you take this trade down here. But I just don't think the long side makes sense right now for the risk. And there are other diamonds on Legacy. DXY, this is the DXY. Maybe it's a diamond, maybe it's not. Maybe it's just a messy consolidation. It doesn't look bearish. It does not look bearish. It's trying to make higher highs. It refuses to break 100. This measures significantly higher. So let's just hope for all of us, unless you're bearish, but let's hope that this doesn't happen. DXY is at 112 post-halving. I think we have a tough time holding 60. Just something to think about, okay? I'm not calling anything. I'm just saying, look, if DXY is turbo bullish, we are in trouble on the crypto side. The other concerning part of this is the euro, which we actually are correlated pretty highly to on the Bitcoin side, looks just as bearish as Dixie looks bullish, right? This to me looks like a diamond top all day. This should break down, which is a problem for Bitcoin. So either the correlation decouples or the rationale decouples or something, and we can be okay, we can be fine, but it's kind of looking, we'll find out. We'll know. We'll know in a couple of weeks here. Quickly for the rest of the Legacy, the SPY looks fine. I'm not bearish all-time highs. This doesn't look like a buy to me. We've had 5 months of straight up, much like Bitcoin testing that daily Kijun. I wouldn't mind a little scare, a little dance around 500 for the SPY. What we don't want for crypto would be this edge-to-edge move from, say, 505 to 470 or something like that. If we get that, crypto's probably not too happy. And you can see the last time that happened in Legacy. And you can also see the breakout in November, right? As bearish as everybody was on the way up, people are starting to get extremely bullish because they've missed sort of everything. And it's a little bit of a warning sign when everybody starts to pile in, right? Who else is going to buy up here? I don't know. I guess just 401k is DCAing every 2 weeks, but something else to watch in the periphery this week. The Qs also look a little tired on low time frames. It's having trouble maintaining this channel. Looks okay. Survive this ultra low time frame head and shoulders so far, but it does look a little tired. And all crypto needs is Legacy just to not go to zero, right? As long as Legacy is consolidating or chopping around, totally fine. But if Legacy is angry and going to the core, then crypto's probably going to be with it, right? I still like the XLE chart on Legacy. If you are concerned about geopolitical risk or something, this may be a chart for you. I really like the chart pattern. I like the trend. I like the cloud. This will be an all-time high for XLE. This is the energy ETF. Timing-wise in the pattern, it looks about right. So it looks good. Looks really good. And it's gone straight up for like 8 weeks or something gross like that. Lastly, oil here. Something else to watch this week. If the geopolitical stuff picks up, does it affect oil? Which will affect inflation and risk and, blah, blah, blah. Right. So far, doesn't look to be like the market's super concerned with geopolitical stuff relative to oil or energy. We also have Granholm saying we're going to refill the SPR by the end of the year. Good luck with that. So just to quickly recap, this is really the most important chart for me of the week. The Bitcoin head and shoulders versus invalidation versus, the lower time frame, 4 hour that everybody and their mother is watching at this point in time. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.